Hello and welcome to Unacademy IAS, a one-stop destination for all the English medium civil services aspirants. Welcome to another session of Economy This Week, wherein we take important economy-related articles from different newspapers such as Mint, Business Standard, Business Line, etc., and analyze these particular article on weekly basis. In today's session, these are the articles that I'll be taking up for discussion, and the time period that I'll be covering will be from 18th to 24th September 2025. Let me begin the discussion. The first very important article is associated with the concept or the portal of Bima Sugam. Point number one, in case of India, one of the very often things that are discussed or the issues that are discussed is of insurance penetration. That is when we talk about healthcare or for that matter vehicle accidents, etc., we require to take insurance. But in India, the insurance penetration is very, very low. And because the insurance penetration is very low, a lot of times, whenever it is the question of taking care of our healthcare expenditure, the out of the pocket expenditures are very, very high. The government of India by 2047 has come out with an initiative or has announced that they want to ensure there is insurance available for everyone. That is basically the objective of insurance for all. And the same is being implemented by Insurance Regulatory Development Authority of India, IRDAI. The IRDAI back in 2022 basically proposed this particular model of the Bima Sugam. But the idea of a Bima Sugam is part of Bima Trinity. Let me give you the basics here. The Bima Trinity basically consists of three very important aspects. The first one obviously has to be Bima Sugam. The second one is the Bima Vahak. And the third one is the Bima Vistar. Now, before I explain to you what is the meaning of each one of these particular three pillars, I have a very important announcement to make. I know a lot of you are preparing for the civil services examination 26 and 27. In order to ace the examination, you need to ensure that you have a very good coverage of the static portion. You have the targeted coverage of the current affairs as well. For example, in Unacademy, for all of our students, enrolled students, we run a program called as Unacademy's Current Affairs Navigator, where on monthly basis 30 hours of dedicated current affairs coverage is done. You also need to have access to multiple prelims as well as mains test series and very good reading material. All of this is available to you once you enroll into a courses which is available at a price of 19,999. And I've been told today that on 27th September, this particular offer is going to be over. Those who are interested to enroll with us, please do check out the details by clicking on the link provided in the description below. Let me get back to the discussion now. Like I said, the IRDAI in its vision 2047 to ensure that there is insurance coverage for all has proposed Bima Trinity. And Bima Trinity basically consists of three components: Bima Sugam, Bima Vahak, and Bima Vistar. Let me start with the last one so that the discussion can culminate with the latest announcement of Bima Sugam. Bima Vistar essentially is one product, one insurance product that the IRDAI is proposing. Rather than purchasing multiple insurance products, how about one product being offered to you? Second one is Bima Vahak, which is basically a model which is driven by women participants. That is, in a rural part of India, a lot of times the decisions are taken where inputs are influenced or inputs are provided, decision is influenced by women participants. How about having certain intermediaries, that is the middlemen, the insurance agents who are women, who will go talk to women of the households in a rural part of India? That model is basically referred to as a Bima Vahak model. Coming to the third one, regarding which the announcement has been done now, the Bima Sugam initiative. This is Bima Sugam initiative. Let me explain to you. Let's say right now you want to purchase a vehicle insurance. You also want to purchase life insurance. You want to purchase medical insurance, etc. What is the practice that we follow? We go to the internet, that is, we go to Google, we will search for the insurance service provider. A lot of time, the intermediaries, I repeat, lot of time, the intermediaries' websites are recommended to us, or the intermediaries' apps are recommended to us. We will download the app or we will log into the website and we will purchase different types of, let's say, insurance products. The problem here is these are merely intermediaries. For example, some of you might be wondering, sir, what is an intermediary? Give me an example. Policy Bazaar. You go to Policy Bazaar, you can compare different types of policies. You will purchase a different types of policies. But mind you, Policy Bazaar is just a market where different, let's say, products are being sold to you. Insurances are being sold to you. Policy Bazaar is not selling their own insurance. They're simply providing the services where you will purchase insurance of a different company. They're intermediary or a middleman who is going to make certain amount of commission. But the problem here is to purchase these kind of different types, or let's say different products of insurance, we'll have to search different websites. Pricing could be different. The type of, let's say, products could be different, which might be a cumbersome process, which might create a lot of confusion, etc. And moreover, there is one more problem with this model. The problem is, let's say I'll purchase an insurance product using the intermediary website. Now the claim settlement has to happen. Will this intermediary such as Policy Bazaar provide any kind of a support to me? Absolutely no. Their duty is to simply sell you insurance product and move out of the market, or basically allow you to claim or have the final settlement with the insurance company whose insurance product you have purchased. So there are a lot of problems associated with the current model that is being followed in India. And on the other side, the insurance penetration levels in India are very, very less, hardly around 3 to 4%. So, what the IRDA has done now is basically promoted the model of Bima Sugam portal. Bima Sugam India Federation, BSIF. Please remember the name of this. Bima Sugam India Federation, a non-profit organization, has been set up where these insurance companies have certain amount of ownership. Now, this Bima Sugam in the India Federation has launched or unveiled the website for Bima Sugam. What is the speciality of this particular website? How different is it compared to, let's say, a Policy Bazaar website? First and foremost, like I said, Policy Bazaar is basically an intermediary, a middleman. Whereas the Bima Sugam portal that is being operated or will be operated by Bima Sugam India Federation, BSIF, is owned by the insurance companies themselves. It is a non-profit organization, NPO, which is set up under the Companies Act. And this is basically a one stop, I repeat, one stop for all the insurance requirements that you people or other consumers in the market will have. For example, you want to purchase a life insurance, you want to purchase medical insurance, you want to purchase, let's say, vehicle insurance. All of these types of insurance products will be listed by the insurance companies. All of them will be available in this portal alone. And because the insurance companies are the owners of the BISF, which will be operating this, it is basically owned and operated by the insurance companies, not directly but indirectly like this. And not just this, whatever sensitive data you people have regarding the insurance claims or, right, let's say your social security data, etc., all of this will be stored in this particular portal in a centralized system. And this portal will also help you not just to purchase an insurance product, it will also help you in renewal of the insurance product, and not to forget, even in the claim settlement, even in promoting the claim settlement. All of these particular steps from starting point to the end point of an insurance supply chain, all of them will be present in the portal itself. So this is a specialty associated with the Bima Sugum website unveiling. Right? So based on the discussion here, let's solve an MCQ. Those who want to solve the MCQ on your own, pause the video, solve it. Or else the other set of students or the learners who do not want to solve on yourself, listen to the discussion now. Consider the following statements. The Bima Sugam India Federation is completely owned by the government. No, this is not completely owned by the government. In fact, right, the insurance companies will also have ownership in this. IRDAI is headquartered in Mumbai. Please check this. IRDAI is not headquartered in Mumbai. This is incorrect. It is in fact headquartered in Hyderabad. And most of the times UPSC has the habit of asking these kind of statements. Be very, very careful. Now, before I solve the third question, a third statement, let me ask you one question. Based on which committee's recommendation, I repeat, based on which committee's recommendation, we established Insurance Regulatory Development Authority of India? What is the right answer to the question? Do let me know in the comment section of the video. The Bima Sugam, Bima Vistar, and Bima Vahak form the Bima Trinity. Absolutely true. Out of all the three statements, one is correct, two are incorrect. Right option for the question will be option A. Only one of the statement is correct. Now, next article associated with shipbuilding. In recent times, there has been a lot of discussion associated with shipbuilding. And before I start the discussion, listen to me very carefully. The promotion of shipbuilding is not being done only in India, by the way. China has become the market leader already because the ships are very much required. Reason being, you require ships for trading purposes, you require ships for defense purposes as well. And China, in the last 1 decade, has invested a huge amount of money. The government has subsidized a large number of companies in China, as a result of which, today, the Chinese shipbuilding accounts for more than 50% of the total market share in the global market. Historically, the market share was dominated by USA, by the way. But over a period of time, compared to USA, the promotion of shipbuilding has been much higher, promoted by the government in China. That's a reason now the lead has been taken by the Chinese companies. But having said so, very recently, even the United States of America, the government of USA, has started promoting the concept of shipbuilding there. I'll give you one example. Very recently, the president of USA introduced or got passed a particular bill, the Big Beautiful Bill. Under the Big Beautiful Bill, there is allocation of around $30 billion, which is being earmarked, which is being reserved to promote shipbuilding in USA. Now, what is the situation in India compared to other countries? How does India fare? Out of the total shipbuilding in the global market, India accounts for around 0.05%. 0.05%, mind you. And ships, like I said, are very much required, not just for trading purposes, but for defense purposes. In fact, if you look at the total amount of trade that India conducted with the rest of the world, let's say 50 years ago, out of the total trade, around 40% of this particular trade, that is basically the merchandise exports and imports, was handled, I repeat, was handled by Indian ships. That is the ships which were manufactured in India. But over a period of time, because of, let's say, lesser allocation being done or ignorance of the policymakers, etc., this market or shipbuilding activity in case of India has become lower and lower. Other countries have taken a lead. In fact, even today in the newspaper, this has been reported. The government of India, that is basically the Union Cabinet, has approved a budget or allocation of more than 70,000 crore rupees to promote shipbuilding activities in India. So, this is the latest update. Please make a note of this. But before this, before the announcement was done yesterday, the approval was given by the cabinet yesterday, which is there in today's newspaper, that is the Hindu as well as other newspaper. Last week itself, there was a lot of discussion. And in the budget also, there was certain mention that was done by the finance minister to promote shipbuilding in India. So, what are the other very important points associated with the shipbuilding promotion being done by the government? The government of India simply says the companies which are involved in the shipbuilding manufacturing activity might be allocated with infrastructure status. That is, this kind of activity will be given with infrastructure status that will help the companies borrow from different financial institutions at lesser rate of interest. That is one very important point. Second, like I said, the government of India now wants to promote shipbuilding in India because it accounts for a very small percentage of the total trade that is being done, or the total trade that is being carried in terms of imports as well as exports within the domestic market as well. They want to increase it. In fact, the government of India has set up a target of ensuring that India will become one of the largest shipbuilders in the global market. One out of top five. One out of top five by the year 2047. By 2047, India wants to ensure that India will be one of the largest shipbuilders in the global market. But again, when I say shipbuilding, please keep this in the mind. We are discussing more from the context of the international trade, or basically the goods exports, imports, as well as transportation within the domestic market. The discussion associated with the defense is a different discussion altogether. The third very important point, there is a NBFC, a non-banking financial company which has been set up, the first maritime NBFC. Please remember that the first maritime NBFC which has been set up, which is going to provide, right, the financial assistance, which is going to provide financial assistance for the development of, right, the shipbuilding in India. The name of this particular entity is the Sagarmala Financial Corporation of India Limited. And this particular Sagarmala FCIL or SM FCIL has already entered into an agreement with SDHI to promote shipbuilding activity in the domestic market. So these are certain very important points associated with the concept of shipbuilding. Please look at this article in the context of India, USA, China, the global trade, defense, etc. Now, before I go forward, I just want to give you one more very important point, or one more important aspect of preparing for UPSC mains. Some time ago, I launched an initiative, Economy for Mains. Under this initiative, the concept is very simple. I want you to read and come prepared for the class. And what is the model of the class? I'll be giving you large, bigger articles, very, let's say, longer articles, and many articles. For example, last week I believe I gave around 12 articles for the students to read. So the model is very simple. I'll give you articles. These are editorials, or let's say lead articles, right? The bigger articles which are given in different newspapers, not just Hindu, other newspapers as well. Read those articles. Be prepared. Come to the class. There will be a special class, free for all, absolutely free for all. For example, this second class of Economy for Mains will be conducted on Saturday, the coming Saturday at 3 p.m. So the model will be, I'll give you articles. For example, have a look at this. The first set of articles is on skilling in India. And skilling is a very important aspect of UPSC mains. Please be very careful, especially under GS paper 3. So I've given multiple articles associated with skilling. And the second set of articles is on electric vehicles, EVs, electric vehicles. So I've given around 10 plus articles for both of these particular topics. Read these articles, come to the session. I will briefly discuss what was given in the articles. Then I'll give you descriptive related questions. That is the kind of questions which are asked in the mains examination. Take 10 minutes, write the answer. I'll give you the model answer, compare with the model answer. Then you will find out what is the level of mains answer writing that you are doing. And if you keep on doing this periodically like this over a period of time, the quality of answer writing will improve. So the PPT link has been provided, download it. The special class link will also be given in the description of this particular video. Do not miss out Saturday 3 p.m. Now let me go ahead. Next article. The government to channel centrally sponsored schemes funds via RBI from November. As of now, more than 60 schemes are already covered under this initiative. What is this? Listen to me very carefully. Back in the year 2022, a new initiative by the name of SNA-SPARSH was implemented. Single Nodal Agency SPARSH was implemented. And what was the logic under SNA-SPARSH? The logic was generally the practice that is followed by the union government in the context of centrally sponsored funds is that the center will allocate the funds to the states. The center will allocate the funds to the states, and these are centrally sponsored. What is the meaning of centrally sponsored? Certain amount of expenditure will be incurred by the center, remaining by the states. For example, PM Kisan, right? That is Kisan Samman Nidhi, and many other initiatives. So, under these initiatives, generally around 60% of the funding will be borne by expenditure will be borne by the central government, and right, let's say the remaining 40% in this particular case. Earlier, I said Kisan Samman Nidhi. Specifically in this particular context, rather than PM Kisan, because their central government will bear the burden. Let's say Krishi Sinchai. Krishi Sinchai, that is associated with micro irrigation. 60% is borne by the center, 40% is borne by the states. So in this particular case, center will allocate 60% of the funds. Remaining 40% of the funds are supposed to be allocated by the states. Now all of these particular funds will be deposited into one account called as a single nodal agency. That is, one account will be opened, and all these particular funds, that is, from the center as well as the states, will be transferred into SNA, and from here, the expenditure for the scheme will be borne. The expenditure would be released. But the central government is worried about certain things here. What are the worries? One, lot of floating funds are there, which are there in the bank account of the state government. What do you mean by floating funds? Let's imagine the center will transfer 1000 crore rupees to the state. The state treasury will take it. Another 40% of the funding has to come from the state. Now, what if the state delays the transfer of the funds? There is a one concern. If the state delays the transfer of the funds, implementation of the scheme will also be delayed. Second, now let's say the state will also take the 40% fund the transfer that it has to do or expenditure it has to incur. All the amount will be transferred into SNA, but the implementation of the scheme will be done after 4 months, after 5 months, after 6 months, which means for that particular time period, the funds were simply sitting idle or sitting unutilized in the bank account, that is SNA account. This is floating funds. So the flotation of the funds is very, very high to the extent of more than 1 lakh crore rupees. The center is worried that it is allocating funds, it is allocating money, but the utilization is being done later on. But the center is finding that it doesn't have sufficient money for other purposes. It wants to spend money on other projects, but they don't have money. The center is forced to borrow from the market, whereas the states are simply sitting, right, let's say, sitting idle or keeping this particular money idle under the centrally sponsored schemes. So what is the objective now? Government of India simply says important things now. Two important things. Whenever the states are delaying the transfer, there is a penalty imposed by the center. Whenever, right, the center is transferring funds, it is simply sitting idle in the SNA account. You want to address both of them. And center wants to ensure the funds are released only when the work is done. Only when the work is done. So now this particular scheme, SNA-SPARSH, which was implemented for some of the schemes, will be extended for all the centrally sponsored schemes being implemented at the state as well as the union territory level. And this will be implemented from 1st of November 2025. What will happen under this initiative? Listen to me very carefully. Here is the Reserve Bank of India. Here is the RBI. Now, authorization has been provided to RBI by both center as well as the states. Authorization. What is the meaning of that? You will understand in a minute. And on the other side, let's say the state government will implement a part of the project under centrally sponsored schemes. Once, right, this expenditure will be incurred, or let's say project is developed, certain money has to be released for the work that is done. Now the file will be sent from the state to the center, saying that so and so much amount of funds have to be released. Now the center will transfer this particular file to Reserve Bank of India. Whatever is the share out of this total expenditure, whatever is the share of the central government, now RBI will take the money from the consolidated fund, and whatever is the share of the states will take that particular money from the states consolidated fund, and now the money will be released. Now the money will be released. This is basically the concept of just in time. JIT, just in time. What is the benefit of this new initiative? Under this new initiative, the floating of the funds will not be there with the state SNA. That will be addressed. Second, now the states cannot delay providing the funds, their share in the centrally sponsored schemes. The monetary penalty that was being imposed earlier by the center for this particular delay will not be imposed anymore. And more importantly, the center simply says, earlier I transferred the funds. I basically faced a shortage in other initiatives. I borrowed money. I paid interest on that. Now, because I'm not going to transfer the funds in the funds in the first instance, that money will be there with me. I do not have to borrow. So the interest liabilities that I used to incur earlier to the extent of more than 6,000 crore rupees now will be addressed. So these are certain very important points associated with the centrally sponsored schemes, the methodology of the transfer that is going to be conducted from November going forward, just in time, as well as single nodal agency. Associated with this, I've given an MCQ. Let's solve it. SNA-SPARSH was launched in 2019. No, this was launched in 2022. It will be covering only the central sector schemes. No, this has been modeled targeting centrally sponsored schemes mainly. The schemes implemented at the states as well as the union territories will be covered under SNA-SPARSH. Absolutely correct. The schemes at the states as well as the UTs will be covered under this. Right option for this particular question will be option A. Only one of the statement is true. Next one. Amid US tariffs, PM pushes for local production. Although the article discusses the Prime Minister in the speech talking about need to promote self-reliance or Swadeshi, domestic consumption, etc. One very important aspect of this particular, let's say, discussion that has been provided in the article that you should focus upon is the concept of PM Mitra. Please be very, very careful. PM Mitra. What is this PM Mitra? PM, as usual, will stand for Prime Minister or Pradhan Mantri. Mitra stands for Mega Integrated Textile, Textile, Regional and Apparel Park. Regional and Apparel Park. This is basically the full form of PM Mitra initiative. Now, what is this PM Mitra Park that I'm mentioning here? Because the first PM Mitra Park, make a note of this. The first PM Mitra Park, the launch of that has taken place now. PM Mitra Park at Dhar in Madhya Pradesh. Totally 7 have been approved. Totally how many have been approved? 7 have been approved. Out of the 7, the first one, the foundation stone has been laid by the Prime Minister. Now, that is in Madhya Pradesh. Preliminary question, be very, very careful. But what is the logic of PM Mitra? The key point associated with PM Mitra is the concept of 5F. 5F. What is this 5F? 5F is fiber, or before fiber it will be farm, farm, fiber, factory, fashion and foreign. Fashion and foreign. Right? What are these particular five F's? Essentially understand this. Right now the concern is that there is a declustering. Right? What is the declustering here? From the farm, the fiber that is inputs are taken, cotton, etc., and it is converted into fiber. Now, where the fiber is, right, let's say produced, from there, the factory which will convert this into different types of threads, that will be at a different location. Once the threads are prepared, now the textiles will have to be manufactured or produced. That unit is present somewhere else. And from there, it has to be exported. Now, there is a lot of distance that is supposed to be covered from the textile hub to the port. The problem here is very simple. Because of a fragmented supply chain system, I repeat, because of the fragmented supply chain system of different activities that are supposed to be conducted in manufacturing of the textile, the cost of transportation is higher, the cost of production is higher, and as a result of this, the cost of textiles is also higher, export competitiveness is lower. The government of India wants to address this. And that is the precise reason the government of India has announced a PM Mitra Parks. And what is the logic of PM Mitra Parks? All of these particular activities, that is production of threads, production of textiles, etc., all of these now will be clustered. All of them will be clustered, that is present in the same region. And as a result of this, the logistics cost, warehousing cost, transportation cost, cost of production overall are expected to come down. And this is expected to boost production, export of textiles from Indian market to the external. Right, so this is important. PM Mitra is important, especially in the current scenario. What is the current scenario? India has been imposed with 50% tariffs. Has been imposed with 50% tariffs. Not all of the sectors or not all the industries, but many of them, including textile exports. Our exports now have become less competitive compared to the other exporters in the Asian market because the tariff announced and imposed on other countries is comparatively lesser. So, whenever you talk about, let's say, the trade, right, let's say hurdles or the trade barriers, the technical term is a trade barrier. We basically say the trade barriers are of two types. One is a tariff barrier and the other one is a non-tariff barrier. And in the discussion of tariff versus non-tariff barrier, we always basically say the non-tariff barriers are more restrictive in nature compared to tariff barriers. But mind you, when one country is imposed with a higher tariff compared to another country, obviously, the first country's exports will become more costly. The prices would be higher compared to second country's exports. So you are not even worried about non-tariff barriers. The tariff barriers, when imposed at a different rate on different set of trading partners, automatically one country's products would be preferred over other countries. And this is actually hurting Indian textile exports. So, in that particular context, this initiative or this announcement is important. Now, let me go to the next article. LPG Pradhan Mantri Ujjwala Yojana. The Pradhan Mantri Ujjwala Yojana, first and foremost, please understand, was launched in 2016. And initially, the target under the PMUI was to cover 8 crore beneficiaries. It was to cover 8 crore beneficiaries. And this particular target was achieved by the government by 2019. Later on, the government of India kept on adding newer number. That is, the target has been kept on expanding. Now, the government has approved expansion of the target under the PMUI. 25 lakh more beneficiaries. I repeat, 25 lakh more beneficiaries now will be brought under PMUI. And with this, the total number of beneficiaries under PMUI will become 10.58 crore beneficiaries. Please remember the number. Now, what are the important points? What are the important points associated with PMUI? Under PMUI, once you're covered as a beneficiary, the LPG connection will be given free of cost to you. Apart from that, the booklet, the Suraksha hose, etc., will be given free of cost to you. And right, the first refill is also provided free of cost. So the government will ensure that you will be able to get access to the LPG connection. And this is required. Why? You need to promote more and more consumption of LPG. Otherwise, the households will start burning the traditional fuels, such as firewood. And when the households will start burning the traditional fuels, it will contribute to pollution. It will contribute to indoor pollution, to be very precise. That is not a clean fuel. And lot of the household members who will inhale this will also face a lot of diseases in the later part of their lives, etc. So that is the precise reason you need to promote the cleaner fuel consumption, that is LPG consumption. Right, so the government ensures that the LPG connection is subsidized, is provided free of cost to these beneficiaries. And not just this, under this, the beneficiaries will also have a choice. The choice of what? Choice of, right, either taking a bigger LPG cylinder, which is generally 14.2 kg LPG cylinder, or 5 kg LPG cylinders. And those who are wondering, sir, why will anybody choose a 5 kg? What if the family size is very small? You do not require, or you are worried about making a payment of even the 14 kg LPG cylinder. So there are multiple, right, let's say points to be considered, and the government simply says it is up to the beneficiaries. If they want to take 14.2 kg LPG, right, a cylinder, they can take, or 5 kg LPG cylinder, it is entirely up to the beneficiary. Right, so beneficiary is given a choice. In addition to this, 9 refills, please remember this, 9 refills in a year. If you're covered under PMUI, it will be at subsidized prices. That is, the government will provide a targeted subsidy. Government will provide a targeted subsidy of 300 rupees per LPG if you're beneficiary under the Pradhana Mantri Ujjwala Yojana. So these are certain very important points associated with the PMUI. Now the target has been expanded. Now associated with this, let's solve one more MCQ. Consider the following statements regarding Pradhana Mantri Ujjwala Yojana. It is a central sector scheme. Yes. The beneficiary has an option of choosing between 14.2 kg or 5 kg cylinder. Yes. The beneficiaries are given up to 12 refills free of cost under this. Is in This is incorrect, right? Not free of cost. 9 cylinders, targeted subsidy of 300 rupees per cylinder is provided. So first two statements are correct. Right option for this question will be option B, only two. Next article on NaBFID. NaBFID launches facility for partial credit enhancement. Now, what is this NaBFID and what is this partial credit enhancement? Let me explain this. The government of India has set up a Development Finance Institute, DFI, Development Finance Institute. Already multiple DFIs are there. Multiple other DFIs were earlier there, which have been converted into other financial institutes. For example, earlier, ICICI. I'm pretty sure all of you heard of the name of this bank. ICICI. Earlier, this was a DFI, Development Finance Institution. Today, it is not a DFI. It is basically a commercial bank in India. But what is the meaning of a DFI? As the name suggests, the DFIs are the financial institutions which are more focused on providing assistance, financing for dedicated sectors, dedicated segments. For example, infrastructure. For example, exports, imports. For example, agriculture, etc. Right? In the same, let's say, in the same area. Any examples? One is NABFID. I'll come to that. There is Exim Bank. There is the NABARD. Right? There is SIDBI, etc. Multiple types of DFIs are operating in India. All of them come under the regulation of Reserve Bank of India. Now, Government of India, like I said earlier, right, basically invested 100% of the capital in the NaBFID, National Bank for Financing Infrastructure Development, and has set up this Development Finance Institute. Among multiple objectives of NaBFID, one of the objectives is to ensure that there is a higher amount of investment that is facilitated in infrastructure by NaBFID. How so? I'll give you an example and we will connect it to the current affairs article here. There is a very high amount of requirement for development of infrastructure in India. It should not be surprising to you. It's a fact, by the way. There's a very high amount of requirement. How much? According to the article provided here, between 26 to 30, between 26 to 30, the debt requirement itself is very, very high. That will be in the range of around 25 to 27 trillion rupees. Mind you, this is debt requirement. Debt means obviously borrowing. So total borrowing requirements between 26 to 30 for development of right, let's say infrastructure, companies need to borrow in the range of 25 to 27 trillion rupees. And of this, the banks and NBFCs will be satisfying the requirement of around 20 trillion rupees. Now there is a gap. There is a gap of around 5 to 8 trillion rupees. That is, the requirement is higher, but the supply of the debt related amount in the market is lesser. So, what to do? The NABFID has proposed a new system of partial credit enhancement. It has proposed that it will start providing partial credit enhancement. What do you mean by a partial credit enhancement? Let me give you an example here. Let's say a company will issue a bond in the market. It will issue a bond in the market and borrow from the market. And when you borrow from the market by issuing a bond, the company has to pay interest. The company has to pay the principal amount back. Correct? It has to pay back the principal amount as well as the interest. Now, what if a part of this, a part of this will be guaranteed by an entity? Part of this particular payment will be guaranteed by an entity. And this is exactly the model of a partial credit enhancement. Part of the payment that the company owes will be guaranteed by one more entity. And in this case, it is NABFID. And once NABFID will guarantee part of the payment, automatically the credit rating of the company, the credit rating will improve. And when the credit rating improves, the borrower will be able to borrow from the market at lower rate of interest. They'll be able to borrow in the market at lower rate of interest. And that is very common thing. Reason being, if somebody is guaranteeing part of the payment, obviously you will have more, right? Let's say safety, or you will have more confidence on this particular borrower. And when you have more confidence, the borrower will not offer you a higher rate of interest. They will offer you lesser rate of interest. Higher confidence, higher safety, lesser will be the rate of interest. So this is basically the model of partial credit enhancement that has been offered by NABFID to multiple borrowers, that is the corporate borrowers, which will help the borrowers borrow from the market, take the debt from the market at lesser rate of. And this is going to basically bridge the gap of the demand as well as the supply of debt related credit in the market for the corporate end. Right, so these are the various important articles as well as the concepts and the questions associated with these articles. If you're liking this initiative, do not forget to hit the like button. If you are yet to subscribe to our YouTube channel, kindly do subscribe right now. Meet you next time with other set of articles in another episode of Economy This Week. Till then, take care.